Hi, this is Blaine Picelli, and this is my November 2016 Real Estate and Economic Report. I hope you guys have a wonderful Thanksgiving month. The Bureau of Labor Statistics reported that the U.S. economy added a slightly less than expected 161,000 jobs in October, and the unemployment rate stood at 4.9% as investors got to digest the final payrolls report before Tuesday's presidential election. Economists surveyed by Reuters and expected payrolls to grow by 175,000, so this was slightly below expectations. Wages exceeded expectations with average hourly earnings climbing 10 cents, reflecting a 2.8% annualized increase, according to the report. A broader measure of unemployment that includes those who have stopped looking for jobs and those working part-time for economic reasons fell to 9.5%, the lowest level since April 2008. Stocks were down last week. Uh, they have fallen every day last week as investors grow cautious on uncertainty over the upcoming elections. Oil prices fell this week as a report showed oil inventories are surging. The jobs report was very positive, especially with respect to wages, which have finally began to rise after years of stagnation. The Dow Jones Industrial Average closed last week at 17,888.28. The S&P closed at 2,085.18, and the Nasdaq closed at 5,046.37. The U.S. Treasury bond yields dropped. While stocks dropped, investors moved money to bonds looking for safety. That caused bond yields to drop after several weeks of slight increases. The 10-year U.S. Treasury bond yield closed the week at 1.79%, down from 1.86 last Friday. The 30-year U.S. Treasury bond closed at 2.56%, down from 2.62% from the week before. Mortgage rates follow bond yields, so we watch bond yields closely. Mortgage rates slightly higher than the week before. The Freddie Mac primary mortgage survey release on November 13th showed the average mortgage rates from lenders surveyed. The most popular mortgage products were as follows. The 30-year fixed rate was at 3.54%. The 15-year fixed rate was at 2.84%. The 5/1 ARM average was at 2.87. I'd expect rates to be slightly lower than next week's survey based on where we are at the end of the week. But the Feds are meeting in December. A lot of people think that they are going to start raising the interest rates at that time. They've been kind of holding them off because of the presidential election. But we're going to know soon who our next president's going to be. So get out there and vote. You have a great one. Talk to you later. Bye-bye.